Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Macro Monday. Let's take a look at some legacy charts on this special Memorial Day edition of Macro Monday, starting with the asset flows report from James at CoinShares. Globally, we saw over 3 billion inflows last week into crypto products. 2.75 billion of that was in the US, positive mostly across the board. It's getting interesting that, as expected, BlackRock is taking a majority of the assets. I expect when we are fully bullish, like actually crazily bullish, we will see inflows on all of the ETFs, not just BlackRock. So that's something to watch for down the road. But obviously a 3 billion inflow is a big week. Even ETH picking up a decent size for ETH, 326 million. Solana kind of ho-hum there, Ripple negative, and the rest of this kind of just whatever. Globally, it's USA domination all the way. There's no other country that cares as deeply about BTC, obviously. Schedule this week is a bit light because it is a holiday today in the US. For me, the only thing that really matters, lots of Fed speak. GDP may be mildly important, probably a nothing burger, but PCE is going to be the big one on Friday. And then next week, it's unemployment. That's the big data point to pay attention to. The Fed's not going to move until unemployment spikes, and it hasn't spiked. So, we can point to any other soft or hard data, delinquencies on whatever you want, student loan, right? Like we can go down the list. You can give me literally 1,000 data points until it shows up in unemployment. I don't think the Fed's going to care. Right now, currently we're pricing in no hike or cut for the next 2 meetings, and that brings us to September. So maybe September we get a cut because the data is finally bad. Crypto gets upset as it usually does in September, and then we rally into the end of the year, right? I don't know. But as it stands here, we're doing just fine. BTC's pushed all-time highs. We are not seeing cuts. So maybe that's what we want. Maybe we just don't want cuts. This is supposed to go to the calendar section, but we've got CPI mid-June, mid-July, a few FOMC meetings sprinkled in here, some QRA stuff that may be relevant, tariff stuff may be relevant. We had tariffs go 50% in EU and then delayed again. So who knows what's going on with that, right? Then we have some reconciliation bill stuff. We have some tax stuff. And so there's a lot of outside of the norm things going on here, mainly because tariffs weren't a thing previously and the debt deficit burden is not getting any smaller. So all this stuff is going to matter a little bit more for the bond market. And if the bond market gets upset, that could upset risk markets. Thus far, last week, BTC did great. So let them burn down the house, right? If BTC is a metric for central planners making mistakes, the more mistakes they make, the better BTC will do. And it will push people into BTC. I'm not rooting for that. I'm just expecting it. I think most people are because that's where we're headed. But here's a list of dates and events to pay attention to. For inflation, we are seeing this tick up. So this could be the tariff stuff. Most likely that's what's going on here. Will it be a one-time rise or will it be a continued rise? Somewhere in here I have the container ship count. If we want to get deep into the data, I thought these had risen, but according to data from Apollo, the container ship count is still declining. So somebody's lying here, whether it's Apollo or Ryan from Flexport. I don't know. We'll see. But I think there's going to be a little bit of a bullwhip effect on consumer goods, at the very least. For PCE this week, Fed is expecting it to come in at around 2.23. Next month's print for this month's expected to rise. CPI, no change for next month currently, even though Truflation's signaling at some trouble there with rising CPI. And PCE is also on the way up. So if unemployment is fine and we're getting rising inflation metrics, the Fed's going to do nothing. Why would they? Why should they? It just doesn't make any sense. You don't want to be cutting into inflationary data. That's going to push inflation even higher. GDP sitting pretty there at 2.4, no big deal. So far, certainly not anything like Q1. As for BTC, we're sitting at around 109, 110 at time of recording. I still think we're in this weird spot where, we could go to the yearly pivot at 122, the downside risk is just as equivalent, if not greater. I like a stop loss here, a trailing stop loss at 106.6, like a really tight stop loss. We're going to get another Williams fractal here today or tomorrow if we don't make a new lower low. We still have that James Wynn guy flipping back and forth every 5 seconds on futures, whatever. I don't know if we're honestly going to get a move to 93, but I'll be ready. It could be a 5-second wick that bounces, from 93 back to 100. I don't know. But that's going to be an interesting level if we get down there. I think our upside's a little bit limited here. We're going on the 8th positive week. We've never had 9 positive weeks that I know of. 1, 2, 3, 4, 5, 6, 7. This could be week 8. Maybe not. We'll see. But we've never had 9 positive weeks. And June post-COVID has not been particularly bullish. Alts have been rather not great. BTC's up 1.25 today. Most alts not up 2x that. Some alts down. SWI's still down. A few of these are red on the day. So to me, still does not make sense. You're not getting paid to take the risk on alts here. You're just not. Maybe if we retrace a little bit on BTC, alts get extra angry, and then it makes a little more sense to step in. But across the board, all this stuff just needs more time. Give ETH at least till the end of June to me to make a decision. Just doesn't make sense there. You could say, well, this is a flag. You could say this is an M top. I think it just needs more time. One thing that we do have on our side, as far as a tailwind, is global liquidity. The global liquidity index here in the green, 75-day offset, made a new high. So that is very bullish for gold. It is very bullish for BTC. Very bullish for assets with a fixed supply. And that should help limit our downside. Here's gold here on the cloud on the daily. We have seen the Kijun bounce. I said liquidity 5 seconds ago looks great. I don't particularly love it here, but no reason to close anything or to rush to close anything. We're still broadly bullish. We're above the cloud. I just don't think entries make too much sense here, even though both the Kijun bounces have played out beautifully. The next entry you're going to want to look for is something like in January. Bullish TK recross with price above cloud. We do have dollar tipping lower again, and this is helping global liquidity as well. The longer this stays down here, the better. If this ends up being a W or an inverted head and shoulders into September, into Q3, that's how we get a bearish Q3. If we get a massive dollar bounce, I'm not counting on that. I'm not selling in front of that. It's just something to watch for, right? If we don't see bearish continuation here, and we see this bottoming into a seasonally weak period, it would make sense. If the dollar goes from 100 to 105, that crypto has a not so great quarter or pulls back a bit. But as we stand here, looks good. Long end still suffering globally. Again, this is not a good sign. Eventually, yield curve control is coming for everybody. Governments will have to step in and buy their own bonds, and then we'll reach a point where it's just not opt-in, and it'll be some like 401k contribution or something to try to bring this down. Because where this is headed is not a good place. Because nobody can get their spending under control. So here we are. That's why we pay attention to BTC. Looking at the SPY, this just looks like a massive inverted head and shoulders to me. We're bullish on the cloud. You do have a TKC clamp here. I don't know the appropriate time to take a trade on this, but based on this range, I really wouldn't want to be short. I'd rather catch lows between 550 and 570, but it looks fine, right? Like you never know this whole tariff stuff happened based on where we are today. Here's the Qs. Maybe this checks back to the neckline at 495, something like that. It's both bullish in pattern, but bearish in overbought, right? So I don't really love it at this level. And most of the charts look exactly the same. They look just like the SPY, just like the Qs. This is Mag 7 ETF, same deal. Just a little bit overbought relative to where it was. Probably needs to calm down for a little bit. SMH, exact same. Probably a little bit overbought, needs to calm down. And that's kind of the analysis across the board. We can go way down the risk spectrum to ARKK. Looks just like everything else. We can keep going. You might think to yourself, what other stonks are left on the risk spectrum? Well, there's the quantum ETF. Looks slightly different than the leading indices, but still, it's overbought up here. I don't think that's a question. I would not want to take a fresh position up here. There's, of course, the UFO ETF. Same deal. They look the same. They all look the same. I think everything needs a cool out time, a pullback. I got specific questions on a few of these charts. ASTS. I would just watch this diagonal and do nothing until it's back above the cloud. That's it. You got to give this stuff lots of time. This is highly speculative, way out there on the risk spectrum. And yeah, it's been ranging for half a year, but this could probably take us into Q4 by the time this thing moves again. Rocket Lab's another one. Looks decent on the cloud. I don't hate it. It's less overbought than a lot of the stuff out there. Probably still needs a couple weeks to give you fully bullish signs. This is always what you're looking for. Just a soft glide with a bullish TK cross, price above cloud, bullish cloud. You don't have all of that yet. Just needs more time. GME, nobody asked me about this one, but GME did make highs here, probably on speculation that they're going to announce a Bitcoin treasury or that they bought BTC, whatever. Chart looks great. I didn't touch this, but undeniably, cloud picked it up. And I'd expect some high nonsense around the conference, around any announcement. If they don't announce that they have bought BTC yet or whatever, that's mainly why I don't play around in the GME sandbox. Reddit had this beautiful setup of an inverted head and shoulders that has failed for the moment. Doesn't mean it can't eventually pull up here, but the action on this is always at the neckline on a daily breach above the neckline. We did not see that. So based on the chart pattern, still no action here. And based on the edge-to-edge stuff, still no action here. Eventually, I do like a move if it can get into the cloud to 150, but we're not there yet on Reddit. Spotify looks amazing. This looks like Uber. This looks ready for price discovery, ready for new all-time highs. Cup and handle, W, it looks really good. There's really nothing to complain about on Spotify. This is the Polish index, Warsaw something. Also looks very good. I think this is the best country index of the year, and you can see in 2025, at least on the 2-day or whatever cloud you're looking at, you did get a fresh entry. Massive pullback here on what was probably Liberation Day, and then it has bounced significantly since then. So the cloud is good on anything. It doesn't really matter what it is. Sure, this is curve fit to the 2-day, but look at 23 to mid 24. Just a smooth sailing. You got a TK recross there, TK recross there. What's the action here? I don't know. Just trade it with a tight stop loss, but I don't like fresh positions on something that looks like that, personally. CD Projekt Red, I think they're behind, I'm blanking on the video game, but you can let me know in the comments. It's a Netflix show. This is the monthly chart. Maybe this flips bullish. I don't know if they have a game coming out soon or not. You can also look at the GTA game studio, see what that chart looks like. This is the ATVI Activision Blizzard chart. Kind of a rounded move to it, right? I don't love it. I don't hate it. Just kind of is what it is, but it doesn't look bearish. It certainly doesn't look bearish. Hasbro, just throwing that in there. Kind of reminds me of the Disney chart, which I'll look at next, but I like this above 70 down here. This has been ranging for 3 years now, going on the 3rd year. Why play around until it's confirmed on the breakout? But it's a nice little case study and things to watch if we get bullish here in 2025. Here's Disney. Here was the schematic before the breakdown, and it's the same deal. Just like Reddit on the daily, it never really broke out. It never really held those highs. And if it can do that again as a trend trader, I start to like it more. Range traders love this because they bought the lows and sold the highs already. So what do they care? But as a trend trader, a pattern trader, a breakout trader, I like this better above 115. And it, of course, reminds us all of XYZ block, which broke out and then gave it all back and then some. So to me, again, I don't care what this looks like in the range. It's all about the breakout. It's all about the trend. In this case, it would be above 85. Down here, it's just not for me. So that's all I have for this one on this short Memorial Day edition of Macro Monday. If you like this, comment, share, subscribe, and happy trading.